So moving average, convergence, divergence. We all use it all the time. For the most part, there's some CCI users in here and some stochastic users in here. But right now, this is just the basic stuff for moving average, convergence, divergence. All right, so what is it, right? The moving average convergence divergence indicator is a momentum oscillator that's primarily used for trends. Although it is an oscillator, it's not typically used to identify overbought or oversold conditions. As we all well know, there's no bound on it. It appears on the chart as two lines which oscillate without boundaries. The crossovers of the two lines give the signals that you can take off of those two moving average systems. All right, so how do we use it? So the MACD is a very common indicator. It's used by everybody. There's several ways to use it, but for this one, we're just going to cover the way that it was initially intended. So everyone looks at the crosses of the MACD as the buy and the sell, and that's true. However, that's the secondary use of it. The primary use is the zero line is the number one thing that you must be aware of at all times. So if the MACD is crossing above zero, it's a bullish indication. And when MACD is crossing below, then it's bearish. And then again, secondary, when the MACD lines crosses from below to above the signal line, the indicator is considered bullish. The further below the zero line is stronger the signal. So everyone looks at it and they see that histogram going, and they always think about, let me pull this up. So they always think like there's that histogram going, and they're saying, oh, this is really strong, this is really strong. But zero is right here, right? And zero is the number one thing. So once we get our MACD to actually cross above zero, that's your bull signal. Now, these crosses that do occur off of the signal line and the MACD, those are secondary bull triggers, right? So if you're already above zero and you take a trade, once it crosses above zero, then you're good. You're only looking for upside trades at that point. Does that make sense to everybody? Cool.
Questions?
All right, so just continued more stuff, how we use it. The MACD, when the MACD lines cross from above to below the signal line, the indicator is considered bearish, and the further below zero line, the stronger the signal. During trading ranges, the MACD will whipsaw, as we've all seen, with the fast line crossing back and forth across the signal line. Users of the MACD generally avoid trading in this situation or close positions to reduce volatility. We like volatility. Divergence between the MACD and the price action is stronger signal when it confirms a crossover. All right. So next is just going to be the makeup of it, and the MACD is calculated by subtracting the value of a 26-period exponential moving average from a 12-period exponential moving average. The shorter EMA is consistently converging towards and diverging away from the longer EMA. This causes MACD to oscillate around the zero line. A signal line is created with a 9-period moving average of the MACD line. Like I was talking about, zero that's the line. That's the one that you got to be aware of, regardless of what's going on with the crosses that are going on, because if you're above zero, then you're only looking for those bullish trades. So for instance, right here, we come above zero, right there, we come above zero, then we come down, kind of dip through, but then we get a crossover at this point, and then we just run for the rest of the time. Meanwhile, it's staying above zero that whole way. So each one of these crosses can be considered a buy because you're above zero. So first things first, where is it in relation to zero?
That's the genius.
All right. So obviously above zero, we're bullish. Below 0, we're bearish. So here's just another example. When we are above 0 already, and then the MACD crosses, gives you your secondary entry right there. And as so long as we're staying above 0, you can stay in this position. And of course, each one of these crosses can be considered a buy. And then at this point, that's kind of up to you. Wherever your target is, if you were to fib this out, I'm sure your 1272 is somewhere right there. So that would indicate the end of your trade, so long as that's what you use. Does everybody understand MACD? It's really, really simple. There's not much to it. We can go through some other examples if you guys need it, but there's not a whole lot going to it.
Not.
The first and most important thing is it above 0? Is it below 0? Then you're looking to take those trades of the crosses when it's below.
So
Cool.
does everyone understand the functionality of it, which is the simple part? Somebody doesn't understand the functionality, say something so we don't move on past it.
All right. I feel like this might be wasting some of your guys' time because most of you understand how to use this. If you didn't know the 0 thing, then you're behind.
So should we move on?
There you go. Papa's being honest, saying that he didn't know the 0 thing. Awesome. Thanks, Papa. All right. Anybody else? Anything? Thanks, Daryl. All right. If you guys don't need to see any more examples, I'm gonna pass this off to Josh and let him cover the cycle stuff. I mean, I knew this was gonna be a quick class, so I'll do that.
Hey, quick question, Bruce.
Yeah.
Is the cycle related to the MACD?
Yeah,
The-
we're gonna.
the one that
there's
Josh
tons
is
of
going
cycles.
Okay, yeah, gotcha. Okay, that was my question, but thanks.
Yeah, specifically the one that Josh is going through, I believe it's related to MACD.
Yeah.
So
We'll get
All right.
into once you guys
Bruce,
understand the MACD cycles in the simple form, then we can get into other cycles.
Vamsi, you were gonna say something?
yeah. So
Bruce,
I joined. Sorry.
One at a time. Go ahead, Vamsi.
Yeah, I joined a few minutes late, but I know MACD is a lagging indicator, right? Yeah.
True.
Yeah. So I mean, it may not always. I mean, the flow of the price might be it takes before the MACD happens, right? So
Yeah.
are there any instances where MACD doesn't work? Can you show some examples?
Yeah, we're going to go over that right now, and kind of what Bruce covered as far as everyone seeing the crossover and thinking that's a buy signal, and that's not how we're using them.
Okay.
So let me bring my
I'm gonna make you the host so you can screen share.
I want everyone to write down primary and secondary.
Bruce, one follow-up question, right? So we can also take trades when the cutover happens below the 0 line. So
Yeah.
is that right?
Yeah, you absolutely can. It's just the possibility or the probability of your trade being more successful is to trade in the direction in which the MACD is. So if it's above the 0, if you're taking long positions, then you're more likely going to see success on that versus taking a trade at the tippity top, like that example I had on NVIDIA where it crossed down, but we were still above 0. Like there, you can take that, but now you're looking at other time frames, and that's what we do, right? We look at multiple time frame, and we're analyzing all of those time frames to see what's going on with the big picture. And I don't want to step on Josh's toes because I think that's kind of what he's going to get into.
So did everyone write down or type primary and secondary? Can you guys see my screen? Since I have a long screen, I don't know if it shares good.
Yeah, it looks good.
All right, so your primary is 4-hour, your daily, and your weekly. And the reason why we're not adding the monthly into that is because the movement on the monthly is so slow that you could have a cross down on the monthly and we could spend the entire month trending up. So it's not gonna affect us too much for as far as what we're doing. The secondary is 2 or 1 minute if you use it, 5 minute and 15 minute. And this is how I'm watching the cycles each day and how I'm taking a trade each day. And like, I don't know who was just talking about, you know, it's a lagging indicator. Yes, it's a lagging indicator. So I'm looking at it as energy, right? If the daily, the 4 hour, and the weekly are crossed up, those are not buy signals for me. That's all energy and strength of trend. So the 4 hours crossed up, the daily's crossed up, the weekly's crossed up. When I'm going into my day and I'm looking at the secondary cycles, the 2, the 5, and the 15, every time those align and hit up and their energy is crossed up, I know the strength of the trend is going to push really hard. I also know when they're crossed down, the secondary, and the primaries are crossed up, that those down moves are going to struggle. They're going to come down, they're going to retrace, they're going to pop down, retrace, and you're not going to get the big range to the downside. Even if the whole setup is there, you're going to see the setup, you're going to take the trade, and then all of a sudden, you know, it's a couple points and it turns around and you're like, what the hell's going on? That's because the primary is driving it up still. Does that make sense to everyone?
Yep.
Definitely.
Okay, so again, this is going to be a simple concept that we're going to go over. And most things that work trading are actually simple. So this is an example for today. I took spot at the open based on this. All my techs were there. Everything was, all the techs that you guys have started to learn and get a foundation on were there. I had my weekly crossed up and 4 hour crossed up, and my daily was, when I start to see, I use these rather than watching the moving averages because I can get an idea where they're at. So when I see the daily at 1.0 or 1.1 and it's sitting there and I have the 4 hour and the weekly pushing up on it, I know that's actually in my favor and this isn't working too hard against me. So I'm still looking at this day to go up. So when I come in and I map everything out and I watch the pre-market cycle, and as the pre-market bear cycle starts to end towards the open, the 15 is still crossed up. It's going to be slower. So that's already working in my favor. So when these start to catch up at the bell right here, I'm not waiting for this cross up. Obviously, I do not take entries on these cross ups because we are way faster than that. But I am anticipating what's happening. These are starting to move up. So when I see this candle at the open and everything is in my favor in this cycle, I'm buying and I'm not even sweating it. I know any little fluctuation in price, even on this candle, is bouncing up and down, is not going to affect me. I know all of this is going to my target. So that was my trade at the open, based on the cycles giving me the decision to trade it or not. Does anyone have questions on that?
Hey, Josh.
So, okay, go ahead, dude.
Hey, man. So like you're anticipating the turn, so you don't wait for them to cross. So like as you see the line getting over to the 0 line, before that thing even breaks up, you're looking for an entry pretty much. Or you go on the first green candle, or are you looking?
So here's a thing that I've been thinking about a lot lately, because I get a lot of questions are, well, do you enter right here? 1 + 1 is 2, and is this the spot to enter? And do I get in right exactly at this point? Trading is about anticipation, right? So all the tools that we use are as precise as it can get. So I'm not entering trades based on all these calculations that align perfectly, right? There's an element to trading that is your intuition and your anticipation. So when you're using these tools, you have to be able to anticipate, right? If I'm looking at my upper cycle, the primary cycle, and the fucker's up, dude. The 4 hours up, the daily's up, the weekly's up. So where's the strength? Boom, the strength is up. So that's a check mark. So now I chart this out and I have my levels and it's bouncing off of, you know, the FT50 or what, you know, the Kelt and however we use them. You guys know how to use them. So now the last two elements, what are the algos going to do at the bell? And what is this lower time frame cycle going to do? Because this lower time frame cycle will have some down moves if it's in a down cycle, regardless how strong the uppers are. But when I see this starting to converge, I see these up already. I don't have to look for a candle or whatever. I don't have to have these calculations in my head. I can anticipate and make the trade and know that it's going to run. So I literally clicked on this chart. I saw the setup like this, look at the algos they're buying, everything's aligned. I didn't look for a price or whatever, market order, buy. Flipped over to freaking spot, same situation, because I had that prepared in the morning. Same situation, market order, buy. Then I'm just going back and forth and monitoring them. Spot to my target, out. Twillo to my target, out. Done, 9 grand, 20 minutes.
So you buy market orders right at open, Josh?
Right
Did
at
you see
open,
it?
there's no time at open to place a limit order, and shit runs so hard at the open, it doesn't matter. Now I'm not gonna market order something like shop because I've done that and been down 6 grand instantly, but you know, something with a 50-cent spread, well, even spot had a $1 spread, but I still went for it because I saw range was there and everything was gonna push. That when I have the primary cycle is up and we're bullish as fuck, and the secondary kicks in, it's not going to be some little move where you guys get in the trade and you get in the trade right here, and then all of a sudden the price drops down right here and you're freaking out. No, I'm not even worried about it because I know where this is going. It's going up. It's not going to have, if you can find me a spot where all the primary MACDs are crossed up, all the secondary MACDs are crossed up, and all the techs, the Kels that we use, and all of a sudden a candle just drops out right here, I'll give someone $1,000 because it's not going to happen. They're just designed to shake you out right here. So I'm not really even looking at the candles here. I'm looking for my range, and is all this
I'll
energy,
Photoshop that.
is all this energy pushing me up. So to answer your question, Raymond, you don't have to calculate all those, nuances. You're just looking, and if you're getting in right here and it's on your entry and you have $9 a range, don't dilly-dally around. Take the trade.
I got you. So I understand that. Thank you for clearing that up. So I get the intuitive nature of it, definitely. I mean, you're reading tape, you're seeing the price action, and in the morning, you have to go you have to get into the trade, period. But then my next question is, you already have the fib targets drawn out. Are you taking the strike price at your fib target? Or are you taking the strike price, like what makes you determine what strike you're going at? When
So in all the situations beyond Amazon and Google and Tesla, I'm taking a strike that's 1 or 2 out of the money, maybe.
Okay, thank you.
That's it. I want this trade to end up in the money at some point, because then it's going to accelerate. I'm going to make more out of it. Some people, you have to watch what you spend, and you have different things to worry about on your strikes that you pick. But I want, at some point on this trade I want it to kick into the money so it accelerates.
So you want as close to the money, and just not as close to the money, but you want something that's going to move fairly.
Right. So for example, on this, I took the 295s or something. I don't remember. 297. I don't know. But I knew it was going to, this was my target, 299. I knew it was going to be in the money, so I wanted something below that. So I think it was the 295s. I don't remember.
I got you.
So that's how the cycle flow works. So let's talk about everything not being in alignment and having the ability to sit out of a trade. So I get, a message. I don't know what was wrong with this trade. I took it, it bounced off the Kelt, and this algos were buying or whatever, and they don't know what works. And I say, okay, send me a screenshot. Let's go over it. And they send me a screenshot, and I got, they got the 2-minute MACD crossed up, and they got the 15 and the 5-minute MACD crossed down, the 4-hour crossed down, and they're not even looking at that. Well, when I'm trading all day, I'm looking for everything to align, and Trax talks about this a lot. So I want these working together, not fighting against each other, because when they start fighting against each other, that's when you get chopped. That's when you get the candles that retrace. Every candle, it spikes up and retraces, spikes up and retraces, spikes up and retraces. So if the 4-hour is down and the daily's up, the same thing's going to happen for the primary strength. It's going to be choppy. You're not going to have the acceleration that you want. And if you notice, on everything that we're trading, the MACD weekly has stayed positive on everything. So it continues to bring everything back up. So these cycles that we have, they're short-lived. You know, they go daily and 4-hour cross down a little bit, but the weekly just keeps that pressure and keeps pushing us back up. So our down cycles are lasting, 2 days max before everything recovers. Once we start seeing this weekly cross down and joining the party, then we're going to start having some heavy moves downward. Questions or any issues or things that happen regarding this? This is another simple concept that I have to talk to myself every day for as long as I've been doing this, and however successful I am, I'm literally talking to myself all day. Okay, does that trade look good? Okay, don't stop. The MACDs are not lined. What are you doing? Like, I'm constantly having to evaluate and stop myself from taking trades to make sure things are aligned and in the right order.
So you're just constantly verbally out loud repeating to yourself what is going through your mind, what you're seeing visually, and then staying in alignment with what you're seeing.
Absolutely. I always have to talk to myself, like, if it seems like it's easy for me, it's not. It's I'm constantly stopping myself from my behaviors of taking bad trades or chasing or not checking off everything I look at. So I have to talk to myself. Watch this. What are you doing? Stop. That was stupid. Like, I always have to monitor myself, and I have, for me personally, I have to talk to myself so that I can hear it and so that I know what it's doing. And because, I get the anxiety, I get the pressure, I get all the human feelings that anyone else gets that cause you to make stupid decisions. So I've always, for the past probably 3 years, have been just focusing on working on all the negative things about myself and finding a solution to those to make them not hinder my trades, because we all have them. We're all humans, and we all have a different range of fears, a different range of emotions, a different range of aggression, and all those things are going to cause negative impact to your trading. So once you're aware of those things, you have to come up with a plan for each one of them. So yeah, I'm always talking to myself, and I made a bad trade, couple bad trades yesterday, not monitoring the cycle. So why'd you take that? Everything's down, you're rushing, you blah, blah, get out of this trade right now, just all day long. So the MACDs are something that, for me, will end up being my bigger losses and my bigger mistakes, because I will rush into something when the cycle is not agreeing with my other techs, and I'll get smoked. So it's something that I always have to talk to myself. Where's the cycles? Where's the cycles? So I broke it down into primary and secondary so that I can simplify it in my mind better. Where's your primary at? Okay, up. Where's your secondary? Okay, they're not aligned. Chill out. Just wait. Patience until we get to here. Looks like, Track does a good job of timing cycles. He will time the cycles and say, hey, it looks like we need about another 10 minutes before this is actually going to turn around and be ready to move up. And that's something I've learned from him as far as waiting the timing out on them.
So Josh, do you find yourself doing a better trade in the morning at open because you're going through that checklist than you do in the afternoon?
Well,
or throughout
here's
the
the
day?
thing about the open. It's, I spent a long time getting just absolutely destroyed at the open. So I have very particular setup at the open, right? For example, that spot and Twillo trade just happened to be my open trades, and they went perfect today. But if those didn't go, if the algos were selling on that open, I wouldn't have taken those trades. The algos happened to be selling aligned with everything else, or buying aligned with everything else, so I took the trade. I had them planned out to the T on what needed to happen for me to take the trades. So if I take the trades at the open, it's very, very precise plan that I'm going to take. Otherwise, 5 to 10 minutes after the initial move, you can take a counter move, which is also good. But of course, yeah, the first part of the day, there's way more success than the cycles that happen later in the day. The open is not, the checklist at the open needs to be checked off very, very precise. I'm sure
What
a lot
other
of you have
checklist items
experienced.
do you have besides the MACDs, the primary, the secondary?
All our tools. I mean, you guys use the exact same tools that I use. So I Am I out of Kelt? Where am I going? Where's the fibs? Where's everything that I lay out? And I mean, I typed exactly what I was going to do out in the daily analysis on both of those. So it's nothing special. It's nothing we've spent a long time, huh, Bruce, making this simpler and simpler and simpler and simpler.
Right.
So I'm not doing anything different than what we're telling you guys. I just have more experience with it and can follow it. I'm more refined with it. So the exact plan I laid out, pre-market, typed up, is the exact plan I took. That was my checklist. I'm looking for this, this, and this, and this, and they'll work. It's not a bunch. And Tito, I know you kind of overthink things too. With, you know, is this entry right here? Is this precision? Is this the exact point where I need to get in? Is this, you know, what about this part? All of these things that I showed you for these two trades, there was no specific price entry for me. I knew, and that's where you have to have some intuition and anticipation. I knew the range was there for the trade. I had no idea how much I was going to make or any idea, you know, I had no any idea about that. I knew the range was there for a decent trade on both of them. So I market order at the bell because everything aligned perfectly, and then I sold at my targets. And that's it. There was no, beyond me checking the algos at the bell, there was no other thinking involved. I already had all the thinking done.
Hey Josh, speaking of algos, I am having a huge problem with these algos things. Sometimes the price will do something completely different, and then at some point the price will dump, algos will spike up, and then do a continuation. So it's almost as if the algos are lagging the price.
Slow down a little bit. So say it again.
Okay, so a lot of times, like for example, on the indices like QQQ, you'll see the price like dumping, and algos are following, whatever. Algos will continue to dump while the price will make something that looks like, let's call it a bear flag. Kind of like pushes down, does somewhat of a semi V-shaped type of thing, and goes up. Algos are continuously going down. It gets to a certain point where you'll see a spike in the price, a dump. At that dump is when the algos spike up. It'll dump to whatever level, you know, some kind of support, and then the algos will follow the price, you know, and at the end of the day, you can look at the algos and go, hey, cool, see, if you just follow the algos. But it's not true. Like, there's something wrong here. Like, I can't make them work at all. Like, I'm trying to keep it, like, if I see the price going up, I'm trying to make sure the algos are going up or making higher lows, you know, whatever. But a lot of times, that's what I see happening.
Well, I'll tell you right now that they're not wrong.
Okay. No, and I know ultimately they're not. I'm just saying, like, how do you better time it?
So let me ask you this: Are you taking trades? Are you doing your own system still? Are you taking trades on the way we take entries?
I'm really trying to take, like, on our way, on the 30-minute kills and stuff like that. But I'm sure I'm not the only one here that's like, I'm buying off the 30 and then I get stopped out.
Right, which is why we use all the time frames. So
Yeah.
let's go over this. Let's pick it apart.
So while he's bringing that up, I just want to point something out. It's easier to talk yourself into a trade than it is to talk yourself out of the trade. And what he's basically telling you guys is to go through all your checklists and find that reason why the trade won't work. There's been many times where Josh and I and
that makes sense.
all of us have gotten together and we were trying to, like, find all this stuff, and the first thing that we would do is try and poke holes in it and try and find the reason why it doesn't work. And at some point, there's certain things that you just cannot find a reason why it doesn't work. When you find that reason, that's when you get in the trade. Not because you have this mental bias in your mind that says, well, I'm at the bottom of a 30. The fucking algos are buying. I'm getting in this. You haven't looked at everything else. That's the point that he's trying to make, is drive home that you have to go through this stuff and see what's going on the big picture. Me and Josh have gone back and forth about this stuff for 3 years, to where he's always like, big picture, big picture, big picture, right? And you'll see that, yeah, sometimes I post these 100% days, right? But I'm I'm talking myself out of taking trades. And the way that I'm talking myself out of them is I'm finding flaws. Why will this not work? Why will this trade go against me? And that's exactly how I'm doing it.
You have to do that. You have to be able to slow the fuck down and realize there's 9 zillion more trades that are going to happen. And if you're rushing into something where you can't calculate and have a plan, then it's not the right trade. There's never a reason ever to be in a hurry unless there's some extravagant news and the bottom's falling out of something and we want to chase for a couple points or something. Otherwise, there's never a reason to be in a hurry where you can't plan everything out. Otherwise, you're the problem. You're the problem right there. Just like 90% of the time, if I make a bad trade, I'm the problem. I always know that I'm the problem. So let's look over cues, and and I will tell you this: the ETFs are much more difficult to use the algos on than normal equities. And you know, you don't ever see me trading any ETFs because I have a little bit more hard time with them. But some people don't, like Zach. Okay, so let's talk about, are you talking about today? Yeah, tracks, for example, and same with Fred.
Yeah, for example, Qs today.
Okay, so let's just go over a trade or whatever you took, and let's just break it down.
Well, no, I took a trade from yesterday. I just kind of swung it because I'm like, okay, this thing's gonna come down, because that's just how it looked like for me. Because it fell out of the 4-hour, it was struggling inside the daily.
It fell out of the 4-hour.
Yeah.
It fell into the 4-hour.
Yeah, I'm sorry, I fell back into it. So, and it did hit, like, you know, pre-market, whatever, hit my target of 262, pushed up, and then throughout the day, I just got shaken out. I was like, okay, this thing is just not budging.
Okay, so let's look at it, and let me tell you, where did you take the entry at?
Pretty much, that's like right before the market closed, kind of thing. Yesterday or whatever. So as it was pushing up, like, it's where I took the trade. Like, as I pushed up and I saw it go sideways, and then right before that dump, that's when I took the trade.
So right here?
A little bit above that.
So in here.
I just kind of anticipated. I was like, it's not going. I just, because on my screen, the daily was closed and it was fighting inside there. And it was just struggling all day on the 4 hours. Like, I'm just taking it. Because I really was anticipating like a big dump, because I'm like, okay, this thing has not consolidated enough. So I bought the 260, I think 260 put. But the way it was just moving, like, it just shook me out, because I was like, okay, this thing, the way it moves is just insane. And I could not follow the algos. Like, the price was just all over the place.
Okay, so let's look at it from the whole perspective.
Okay.
So I'm evaluating this yesterday right here, which is, that's the daily right there, the daily 1.5, the orange line I just added.
Okay.
So me personally, I'm not going to take a trade. I don't take trades in the cloud. Very, very rarely do I take a trade when price is in the cloud, because it's a neutral zone. It can still backdoor off the 1.5, which is the standard Kelt settings.
Yeah.
Does this look good? Yeah, it's under the 5-minute, and I can't see the algos yesterday, but the MACDs are crossed down, the cycles looking down. So yeah, I would take this trade and close it off at the end of the day. I wouldn't swing this, because one, we're close to the daily 1.5. And what does the Kelt cycle typically do? Price comes in back into a Kelt, then it goes back up to test the top for the money shot. So what happens here? Goes back up to test the Kelt for the money shot the next day. But it's hovering on this 1.5, which is chop, which is,
you
know.
And I should have taken my profit, but I was like, I think it's going to go to the 4-hour bottom, because I'm like, okay, it fell down, it's struggling here, it's going to go all the way down.
Here's the other thing. The 4-hour 50, FT50 is right here. It hit the top of it. I know you can't see it very good in this 15-minute, but I'm looking at, when Bruce talks about the big picture and I'm looking for range in a trade, I need the big stuff to be out of my way. So I also know, hey, if I'm taking that trade, this is an exit target for me, right? I'm not going to try to, one of the ETFs breaking the 50 or the 200 is a big fucking deal, right? That's not just, doesn't just happen every other week or every, you know, it doesn't happen. It fucking breaks it and it's under it for a while, or if it hits it, it's above it for a while. So the ETF, it hits the 4-hour 50 and boom, it's chopping around. So are they going to consolidate right here and keep it above
that would be support, right, Josh?
Right, absolutely. So you got to take those things into consideration as far as the big picture. So yeah, we fell on the daily, and you, as far as the direction and looking to the 4-hour bottom, you're right there. But what do we have in the way? We have this in the way. So when I post things and I tell you guys, you know, if I draw a line, 4-hour 50s right here. So once we break this 4-hour 50, the next thing would be the main simple MA. So those are the things in the way to get to the 4-hour 50. The only things we use are things that will stop price and completely turn the direction of it. We don't use, you know, VWAP and all this other stuff, although they're good, but they're intermediate turns. They're not the big turns that matter. So if I'm charting this out, and when you chart something out, you need to lay out everything that's in your way for your trade so that you know if the range is there. So right now, when you're taking this trade, you don't have a bunch of range. So even back here, when you take this, you have this before the 4-hour bottom, right? Does that make sense?
Makes sense.
So your entry right here is not bad for a scalp. I mean, that's a good trade. You know, it's the end of the day, the 5-minute trend bar rolled over, which is a big deal. It's falling in. You got your MACDs. That's a good scalp. I would have hammered that and been done with it. So as far as the algos today, I mean, look at price. Let's look at price here. It's choppy all day, right?
Yep.
So if I'm looking at the big picture, I'm still leaning that way with the algos. So it's sold off right here, which this was a nice little divergence play.
Yeah, you're on Roku, brother.
That's Roku.
It's not going to work, is it? Okay, sold off. Divergence play, divergence play. So once I'm also monitoring this to know, you know, where the flow is. Okay, divergence play. Okay, it traded out and popped. Oh, we got another divergence play. Okay, now the price is moving together with it. Now it's moving down. Another little tiny divergence play, tiny divergence play. All those little tiny divergence plays are traded out. Now price is moving up with it. Price is moving down with it. Little divergence play here. Divergence play here that traded out. So this whole big spike down right here brought this down, traded out. Now it's moving with it again. Divergence trade, not really. And then moving with it. So when you're doing this, you can't have a bias, right? You wanted this to go to the 4 hours, so you're looking at it one dimensionally.
Yep.
Just 4 hour, just 4 hour bottom. So when I'm looking at the algos, they're not making sense to me because I want every little down spike to be headed down to the 4 hour bottom instead of looking at it neutral or looking at it the whole picture here. Okay.
Yeah, you're right. You're right.
Well, they're selling it hard. They're selling it hard. And it's not really breaking down, and all these little tiny divergence plays are trading out, and it's holding this 4 hour 50. What do I think about that 4 hour 50? Well, actually, this looks like potentially is setting up for a long for me. That's a good entry for a long swing, right? You're taking a swing off of a bigger time frame turn. So that's a good swing entry, even though it would have been turbulence right there. That's still a swing entry. So I guess I notice, you know, Katie and I went through with this for a while, and he would just get frustrated with the tools and be like, they're not working. And then we'd go over them slowly, and he'd realize that it's how he's looking at things that they're not working.
I think my problem is I'm looking at I'm not a good short-term trader. I've realized that. I'm much better at like seeing bigger patterns. Like right now, I can tell you, I don't care what stock you're looking at. If it's in tech sector, every single one is a cup and handle. Just take a look. I don't care if it's Tesla, whatever. It's all the same. So I can see all that stuff. I guess I'm using the short-term stuff to predict bigger movements, and I get shaken out because I guess it doesn't happen on time, because obviously the shorter-term stuff or secondary MACDs are going to cross and, you know, do their thing.
So if that's your strong suit, then that's what you need to lean towards, right? So your entries need to be off the bigger time frame stuff, and not worry. If you want to take a swing trade, you're not going to be worrying about the 15-minute unless it's a precision entry. You would be looking at something like this, the 4 hour 50, right? So that's a big time frame swing entry, 4 hour 50. Okay, I'm going to take my entry right on that as tight as I can get. That way, if it comes down and tests it, I'm not in the red, right? So I take this entry up here and it comes down to test this. I got to ride negative. So I'm ready for this entry and I'm going to take it right here. Boom, I take this entry and I'm going to stay in it. I'm going to swing it. And if it breaks that 50, I'm going to cut it. Otherwise, I'm going to ride it maybe back to the top of the 4 hour or whatever. So I think for you, possibly, you know, get away from looking at all this smaller time frame stuff and focus on the bigger, the daily, the 4 hour, the weekly, and taking those
Yeah,
moves.
because I got to be honest, I hate the 30, 15, 5 and all that. I absolutely hate it.
Yeah,
If
then don't
anything,
use it.
if anything, for me, the 5-minute kilt is what I call a god kilt, because I swear to God, it's the only thing that stops this stuff. Which to me is
Yeah.
the same way, the way I used to, you know, monitor for like a 1 hour bottom, which is where's the 5-minute rejecting off of? Draw a trend, draw a horizontal line. Once it breaks it, that's your 1 hour bottom, whatever.
Yeah.
If you downtrend, you wait for, you know, lower hourly high, whatever.
Well, see, the thing for you is also you've been trading your own system for a really long time.
And I'm having a really hard time getting
Yeah.
out of it.
Well, I mean, if it's been successful for you, then, you know, don't get out of it. If it's been moderately successful for you, then take some of the tools and pair with it and create something that works for you and your personality and your style.
Yeah.
If the 15 and the 30, you know, isn't your range for intraday or whatever, then don't take those. But I can assure you
Mhm.
that you're not looking at everything just based on that trade that you took right there. If you were looking at everything, you would have saw all of this and had a different perspective on it, right? Because
Yeah.
it's not a big short yet. It wasn't into a big short position because it has those levels. It just fell in the daily. It's still under the 4 hour. It hadn't done its 4 hour money shot yet. The 4 hour 50. I mean, I have a whole screen that just monitors the 50 and the 200, so I always know what kind of trend we're in. And when that stuff is hitting the 50 and the 200 and they're bouncing and riding it all the time, these down moves also don't even faze me because we're riding the two main moving averages that determine bull or bearish strength. So when you're taking a trade, or if you have a trade, message me or somebody else also so we can go over these, because it takes time to see everything naturally. And sometimes, you know, I still miss stuff. So the best thing that Arcadian does is bug the fucking shit out of me all day long, every day with his trades. But we go over him and then he sees more and more and more. Oh, I missed this. Oh, I missed this. Oh, I forgot about this. Does this trade look good? And that's the only way to do it. There's no substitution for time. And your most powerful tool is observation. Observation. Watching things and then not seeing something, then having somebody bring it to your attention. So, I mean, I'm here all day long to do that. It takes what it takes. You know, Zach is the one who got me headed on the path of this stuff, and we do things a tad differently, but was the same with him. I would say, well, this didn't work out. This didn't work out. Well, this is why you missed this. Oh, okay. So I encourage everyone to do that. I mean, that, you know, me, Bruce, we do this. It's not about money for a platform. You know, we all make plenty of money. It was, we came together and we all had, you know, the same common idea of helping traders because nobody else out there really fucking wanted to help traders. So you can bug the shit out of me all you want.
Appreciate it.
Okay.
We just gotta fucking stop Acadian from asking questions so we can get our turn.
Yeah, and that's the other thing. Don't just bug Josh. There's six other people that you guys are more than welcome to message, and that way we're spreading the wealth, right? Because Josh gets hammered, and I know you guys hear him pounding away on that keyboard all day long. What he's doing is answering people.
Yeah.
So if you guys are sending that shit out to other people, like whatever questions you have, send it to me, send it to Track, send it to Fred, whatever. We can help you too, because we've all worked on this same thing together. So what Josh sees is what I see, is what Track sees. We all see the same thing. So we can all help you. Don't
ask on voice.
Or ask on voice.
Because that benefits
so
other
everybody
people too.
can hear.
And the, you know, the other beautiful thing is when we started this was we just thought, hey, we'd been refining this for over how many years and watching how good it worked, and we were just thinking, dude, can you imagine having a room full of 100 people all looking for the same thing and then all agreeing on the same thing, how easy and how much it would benefit people for trading? Like, so if you see something and you're wanting to know about it, bring it up, because then we can all look at it together and say, fuck, let's roll. This is a good trade.
When you guys see something and you spot it and then you tell us, everyone can make money off of it.
Yeah.
It's not just about you and it's not just about us. Everybody can take that opportunity, and if we see something that's setting up, well then we say, yeah, let's fucking do this.
The other handicap as traders is, you know, you get a little bit of an ego and you don't want to talk about your losing, or, you know, you want to pretend like you're just crushing it all the time. And, you know, it's not the path to success. We all struggle. We're all humans. You know, I can speak on most of the stuff that I speak about because I've experienced pretty much every bad aspect as a trader, like blowing through a couple $100,000 to learn everything. So don't just sit there in your own, you know, corner by yourself if you're struggling and not trading and you can't figure it out and you're having those thoughts that you should quit and, you know, maybe you can't do this. You know, the best thing to do is to talk about it and hash it out with people. I mean, I've went through my struggles. Bruce has went through his struggles, tracks, you know, we all have. So I don't want anyone to ever feel like, you know, everyone's crushing it. I can't talk about, you know, how I'm struggling, because I personally want everyone to crush it. I want to prove that this bullshit 2% and everyone can't be a trader is bullshit.